Oh, we're live, as in like we're going?
As in we're live right
All
now.
right, we're going. We're live. Wow. Okay, guys, a lot to talk about this week.
Yep.
Of course, both bad and good. There's a lot of interesting things that happen, sad things that happen, of course, as well.
Yes.
But nevertheless, we have things to talk about. So with that being said, guys, thank you so much for joining us today. It's Friday. I know it's the end of the week. We're all ready to wind down together. Nick's joining us. Nick, welcome back.
Oh,
Nick,
man.
Get that camera on yourself, man. Let's look at
it's
that.
it's a big reveal, although I need to turn my
We actually,
camera on.
that's actually John Krasinski, everybody. No, I'm just kidding.
All right,
That's a handsome dude right
dude,
there.
the anticipation's killing me because my camera's not turning on.
Oh,
Oh, wait,
is
I got
it?
my grandpa's glasses on. Okay,
There you go.
Everybody ready? 3, 2, 1. Hey.
There it is.
There
Okay.
we
Hello,
go.
everybody.
Yay.
Finally.
So let's
I
get
have a
right into
camera.
it, guys. Do we want to talk about what happened on Wednesday?
No.
Do we
I don't
want
think-
to?
Are we allowed?
Well, we're allowed to at a certain point.
Yeah.
But we really need to like.
Well, we can talk about it from what it means for the housing market, the market in general, moving forward. What would it look like in terms of the economy? We can always, obviously, one of the things that's on our agenda is Biden's tax plan. What
Why
he
am I wearing
plans on.
headphones?
Yeah. Why are you?
What I have headphones on?
Yeah,
I'm
it's
watching
weird.
too much Joe Rogan.
Yeah, it's weird.
Yeah. All right, go ahead, Sammy.
So we can talk about Biden's tax plan, what this all means, because our channel is about money, finance, how to make more money, how to invest in real estate, and we don't want to divert from that. So what I can say moving forward. Let's go talk about the housing market. What do you think? What do you think? What happened on Wednesday, and now that Biden is confirmed as the president of the United States, what do you think that means for the housing market, and in relation to fiscal and monetary policy?
Yeah. So let's be very clear. Historically speaking, whenever you have a Democratic president or whenever you have any Democratic administration, but now the game's changed, right, folks? Because it's not just the Democrats that control the White House. What else? What else, guys? What's going on in the Senate? Right? What's going on in Congress?
Oh, it's.
I'm asking you guys. Actually.
Oh,
It's
are you
not like
okay? It's a
rhetorical
complete
question.
domination.
Yes.
Right now.
Isn't it?
I don't know completely, but
Well,
I
other
know.
than all the legislative bodies right now that create law. Oh, hold on, my audio's turned on. Everything that's all the governing entity that creates law is Democratic Party, right?
Sure.
Supreme Court technically it's not supposed to be partisan. Right, Supreme Court is supposed to be nonpartisan.
Should be.
It's supposed to be look at the law from the lens of what is the original Constitution and how is the law, what is the law's intent, right? Because all Supreme Court's job is to enforce the law in terms of their interpretation, right?
Yes.
The justice.
Yeah, for sure. Yeah,
So-
you obviously cannot have the Supreme Court. So here's the pattern that we see, and this is very important, especially for the housing market economy. You guys ever notice that our nation tends to fluctuate? It's like we have a Republican, and then we have a Democrat. It's always flip flopped. Like I don't know when's the last time we've ever seen a Republican president and be replaced by another Republican candidate. You know what I mean? Like you just don't hardly ever see that. So what does this mean? What does this mean for the housing market? Well, there's a lot to talk about here. Because I know Joe Biden has a tax plan or has a policy in which he's going to give a $10,000 credit, or I believe it's $10,000 or $15,000 credit to first-time home buyers. I know there's a lot of policies that in terms of monetary policy and fiscal policy is going to incentivize a more aggressive monetary policy, right? We're going to print more, QE's most likely going to happen again. And my prediction, guys, and if you want me to be very honest, my prediction, I believe that the Federal Reserve balance sheet is going to exceed $10 trillion this year. It's going to happen.
Wow.
We went up $4.9 trillion or something like that, and I think we went from 1.9 to 7.1 in a matter of like 3 or 4 months. The amount of things that they have on their balance sheet is ridiculous. But I think under the Biden administration, I think more of that is going to happen. I think we're gonna print a lot more money. If you look at the way that Republican administrations and Democratic administrations run housing markets, they're very different. Republican administrations are much more free market. They want to see the market play out. They don't mind necessarily a market correction because they understand the economy works in cycles. Now, I'm of the philosophy that, well, who created these cycles? Why did these cycles even start to even begin with? But a lot of times when you see Democratic entities or Democratic administrations in office or in the Senate or in Congress, a lot of them are just in favor of, and I don't mean this in a very derogatory term, but a lot of them are in favor of a lot of short-term solutions. And you know what, guys, let's be real. That's how just politics works. They want the good things to happen while they're in office so that it can make them look good. The solution to what's happening right now with the economy, the solution to what's happening right now with the amount of money that we printed is not something that's going to be solved in 4 years. So why would anybody have any incentive who sits in office to solve any economic problem when they themselves will never get the credit for it? It just doesn't work like that. You know, imagine doing something phenomenal and your opponent, somebody who's in the other party, gets credit for it 8 years later, 12 years later, 20 years later. No politician, unfortunately, on God's green earth wants to see
Well,
that.
that's funny because that's pretty much how corporate America works.
That's how everything works.
Yeah,
right?
it's unfortunate, and you know the idea should be, you know, sure, you're only a president for 4 years, you're only a president for 8 years maximum, right? Sure. And if what you do impacts and benefits the future of America 20 years on the road, that should motivate you. Instead, oh, how can I look good right now in my term? Get reelected or leave. So it's very selfish driven, right? And I don't care what side you're on, whether you're a Democrat or Republican. The motivation should come from, hey, if I'm the president of the United States, my action today should have a positive impact 10 years, 20 years, 30 years down the road outside of my term. Mm-hmm. Same thing goes with Congress, and it's surprisingly...
It's also the opposite effect, where a lot of times when a president does something that makes him look good in the short run, long term, it actually does not work that way. Yeah. Look, I mean, I'm not going to pick on names, and guys, let me be very clear. I'm not Republican. I'm not Democrat. I'm a truth seeker. I'm an educated man, right? If you look at what Obama did back in 2008, he started the QE process. A lot of the process that we have currently was created by his administration, and unfortunately, they had some long-term negative effects. You know, so it's very tough. It's very tough to have a non-bias when you see one party constantly doing one thing and the other party doing another. Mm-hmm. But I do believe that, you know, I've been doing a lot of research this past week. You know, there's the NAR realtor, the National Association of Realtors. They're a chief economist. You know, they're saying that they believe the housing market's going to continue to flourish, which of course any realtor will tell you that because they want to sell, you know, homes. But if you look at Zillow economists and Redfin economists, a lot of them are saying that they're going to see 2021 the housing market continuing to flourish. Rent has gone up only 1% the last 12 months. Now, granted, a lot of that is due to the pandemic and a lot of economic hardships. But I do believe there is going to be a shortage of single-family homes sometime in 2022, 2023. I do believe that there will be some type of correction in terms of inventory, low inventory. But I don't see the scenario like it was, you know, 12 years ago, where you have like all these abandoned houses and, you know, that have mortgages attached to them. I don't see that as the reality right now. I don't know if I agree with a lot of these economists that say that, you know, the housing market is going to continue to flourish and prices are only going to go up. Considering the source of where it's coming from a realtor who wants to sell you a house. So of course they're going to tell you the value is always going to go up. You can't sell something that's going to depreciate in value. You obviously can't. So I think values are going to drop. I really do. I think housing prices overall, the median sales price is going to decline. As inventory does, will skyrocket, will go up due to everything that's going on, due to displacements and due to one-ups. Mm-hmm. I do believe, though, that the single-family housing rental market, I believe that is going to flourish in 2021. I really do think so. I think the single-family housing market is going to do well. It's going to flourish because people want to still live in the houses, but I don't know what the capabilities are going to be for them to get a mortgage. We'll see. Banks tend to tighten, right, during those stages, and you know, when banks tighten, history will tell you the single-family rental market does flourish time and time again. So I don't know. What are your guys' thoughts on what 2021 brings in terms of policy? I know you guys are into more of the political news than I am. Right? You guys are more aware of it.
Well, I mean, Biden had a plan to increase taxes. He said it throughout this campaign. He wants to increase capital gains. He wants to increase taxes on anyone that's making more than $400,000. He had plans to get rid of stepped up basis, as well as the 1031 securities exchange. He had a lot of plans, but I don't know if he will necessarily do that this year or the next. I think he may introduce it 2023, 2024. I think his first priority is going to be getting rid of the COVID-19, right? Getting that out of the way. So for those that are wondering, Biden's going to increase taxes, I don't think it's going to come right away necessarily. I think that's going to come second half of his term.
Well, you know what I think? I think once if Biden were to get rid of the stepped up basis, I think you're going to see a lot of people wanting to sell their properties. I think you're going to see a lot of people want to get out of the real estate market. Yeah. Especially because real estate is such a tangible, commoditized, investable asset compared to like the equities market, the securities market, stock market, you name it, right? I think a lot of people are going to want to jump ship. And when you have big players that take the role of a commodity, such as Bitcoin, and obviously other things, other digital currencies that are now coming up as the big commodity players in that market, I think real estate, a lot of people are going to be interested in selling their real estate properties. But do not be fooled. Time and time again, history will tell you that real estate is the best asset to invest in. Time and time again. If you look at it a 50-year span, real estate's up top.
I think instead of selling, what people would do is they'll just die with their debt, or they'll just put a mortgage on it.
Yeah, I don't know.
Because they can still still liquidate the equity of the property, but debt is not taxable, right?
Yeah. So you're saying they're going to refinance and pull their money out?
Refinance.
I don't think they'll do that.
Right before they die.
Yeah, I don't think they'll do that because
the whole idea of stepped up basis is you have to die to take advantage.
Well,
of
you gotta
tax,
die,
right?
Yeah.
So, if that's going away and your kids are expected to pick up the bill for the sale of the property. Yeah. I think what most people will do is instead of selling it, they might just mortgage it.
Yeah.
Cash out.
Maybe
if they
I don't know.
Keep it.
I don't know if I see it because let's. So Nick, I'm gonna bring you in the picture because I need you. Yeah. I need the people to see your face.
Oh, okay.
Yeah.
So let's put you in this scenario. Let's say Nick, you own 120 units of rental properties.
Beautiful.
Right. Phenomenal. Right. Let's say that Joe Biden does indeed get rid of the stepped up basis, meaning that once you die, right, your kids, right, you have 3 beautiful children, right? They are called scrambled eggs, and I love that, by the way, because you're white, your wife is Asian, which like complete opposite for me. My wife is white and I'm Asian.
Role reversal.
Right, role reversal. I love it. So you got 3 beautiful kids. Let's say none of them are interested in investing in real estate. Like none of them want anything to do with it. They've seen daddy wake up at 2 a.m. and have to fix a tenant's toilet, and they want no part in it, right? Would you, as a landlord, right before you die, pull a mortgage on the property? Those properties now have a debt service. Those properties now need somebody to manage them, to manage the debt service and get the rent properly and run the business properly, so that way they don't go to sham. Is that something that you would do, or would you actually consider selling the property?
Would I have do I have existing debt on these properties
right now?
Yeah.
No.
So I own it free and clear.
You own it free and clear.
Okay. Yeah. Because if I had debt on the property, this is what I would bankrupt my business before I would die. That's what I would do.
But you would give the properties to the bank then in that scenario,
right?
You know what I mean? Like
I mean, if my kids don't want it, I don't want to force it onto them.
Yeah, for sure. But like, let's say like you want to help them out, right? Like you're looking to create generational wealth. Which, by the way, like in real estate, a vast majority of landlords who are in their 60s, 70s, and 80s, like their kids want nothing to do with the property,
right?
Which is why I love targeting like older real estate owners because their kids don't want anything to do with it and they're more serious about selling it. And for me, I like to talk to a serious individual. I want to actually engage with you. So Nick, what would you do?
I mean, I would utilize some of the the tax benefits of the Roth self-directed IRAs, stuff like that. I would set that up for my kids and find a way to kind of owner finance this thing out.
So you would sell it on owner financing?
Oh yeah.
Yeah.
I don't know how that would work if I passed away at that point.
That is a good point, though.
Yeah, I think they would inherit the note.
Yeah.
Right.
They would inherit the note.
Yeah, that's a good point because I think we're definitely going to see more owner financing happening because
100%. Well, they're going to have to.
Yeah.
I don't know if we're going to see more of it because I don't know. Because owner financing is such a tough thing to do.
You okay with your mouth there?
Yeah, I had a little thing in my mouth.
Oh, okay.
It's like, it was weird. You guys ever get like weird part? Okay, anyways.
No, that doesn't happen to me.
I mean, I got a big beard, so it just falls in there sometimes.
Yeah, but anyways, so there's not too many people that's very proficient at owner financing.
Yeah.
There's not, unless you read this book, which you can get 0 to 75units.com, which is free, by the way. All you gotta do is just pay $9 for shipping. We teach literally how to acquire owner financing properties, but not a lot of people are proficient at it. They don't know how to do it well. So I worry. But I think a lot of these owners, like 2-3 years from now, that have massive portfolios that are looking to limit their tax liability, I think a lot of them are going to be looking to sell seller financing.
Yeah.
And they're going to put in, but on the other hand, they're going to be putting a lot of stipulations, right? A lot of collateral, so that way their kids don't have to inherit the property back.
Yeah.
They might get a little creative, but these guys are smart, these landlords. So I think you're right, and I think in many ways Nick and I are right. I think a lot of people will be more interested in selling. I think real estate's going to be less interesting.
Yeah.
And I think eventually a lot of them are going to go to the conclusion of we got to sell this thing on seller financing.
Yeah. Yeah, so that I think is going to happen more of. So that's the conversation around getting rid of stepped up basis. This is the whole idea if you own property, you die. Technically, you won't owe any taxes on it. But if the stepped up basis were to go away because of a sudden tax change, that would obviously result that, hey, if I die, if I have properties, my kids or whoever is taking over would have to pay immense amount of taxes, which is, it just adds insult to the injury.
Sure.
I don't know if that does good to anybody other than the fact that your dad or your mom just died and now you have to pay taxes on their inheritance. I mean, I can see both sides of the coin. So another thing that Biden did talk about was increasing capital gains, because right now it's like 0 to 15%, I believe, depending on
capital. You're talking about the max rate.
Yeah, the max
tax
rate
is 25.
25. So Joe Biden did mention he does have plans on raising the capital gains taxes. Yeah. What do you think that's going to happen? And even outside of real estate, what do you think is going to happen?
Even outside of real estate?
Yeah, even outside, because there's people who hold on to stocks and bonds for a fairly long time, any security for a very long time.
Well, I mean, you're hurting the investment market.
Yeah.
You're hurting people who are invested in the stock market, who are invested in real estate. You're hurting a lot of people, man. And here's what drives me nuts. When you increase the capital tax gain rate, you're not hurting corporate America. Corporate America, by the way, the Amazons of the world, they will always find a way to not pay taxes.
Oh yeah. 100%,
Always.
100%.
You got to realize who you're messing with. These people probably 10 times smarter than the people who write the policies.
Well, they're
right?
in a way, they do write the policy, because what they do is they'll write the policy, they'll lobby the crap out of the senators and congressmen to introduce the bill and push that agenda forward.
Yeah, because think about what politicians do. They're not experts in anything.
No.
They're not experts.
Yeah.
People hear us. Hear me, right?
Yeah. They're good at talking.
They're good at talking. They're good at schmoozing you. They're good at getting you to vote, right? They're not experts in economics.
Yeah.
They're not experts in taxes. They may have advisors, but at the end of the day, they're the ones making the decision. Let me tell you right now, the person that started and founded Amazon, a guy by the name of Jeff Bezos, is 100 times smarter than your average politician.
Yeah.
On top of that, sorry, not to interrupt.
No, you're good.
On top
Please.
of that, they probably spend millions of dollars hiring lawyers, tax attorneys,
absolutely.
CPAs that are like the NBA MVP level performers.
Exactly. So the guy, they're significantly smarter. It does not matter what the politicians write, what Joe Biden does, right? If we're talking about intellectual and who's going to outsmart who, I think I got Jeff Bezos over Joe Biden.
Yeah.
Like, I think that much is pretty clear. I'll take myself over Joe Biden, But these guys, the big Amazons, the big corporations that a lot of people complain about, like, hey, man, we got to get rid of big corp, man. Those people, Amazons, the corporations, they will always find ways to mitigate their tax liability. What you're really hurting with increasing capital gains, you're hurting middle class America.
Right, the average people.
You're hurting small businesses.
Yeah.
You're hurting these guys that are, at the end of the day, trying to create something for themselves and their family, and they're trying to provide opportunities for other people.
Yeah.
This is who you're hurting when you raise the capital gains tax. You're not hurting the big corporations. That's not what you're doing. Right, you're hurting the middle class, and that's what drives me nuts. And it's because the people who are in politics and the people who, again, I'm not pointing fingers. I'm not. But what I've noticed in my observation, in my non-biased observation, is that typically the individuals who support Joe Biden very strongly, they don't have any experience in running a business. They don't tend to have any experience with economics. and they don't tend to know as much, right? Again, guys, I'm not a Trump supporter. I'm not a Biden supporter. I do my best to stay right in the middle because I think both sides are just BS crazy,
Yeah.
right? But in all seriousness, the people that are all against big corp, whatever, that you guys think you're helping the poor by increasing the capital gains tax rate, that's not what you're doing. You're hurting the middle class. That's what you're doing, right? And again, it makes me sick. It makes me, you know, and I know, Kevin, you put in here 1031s will die. I think so too. You know, there's something in. Do you guys know about that? Do you guys? I'm pretty sure I saw the end of 1031s in Biden's tax policy.
Yeah, I think we talked about that in a video that Sam produced not that long ago.
Yeah, is the 1031 gone?
No, 1031 is not gone right now. It will. I would even say will. It could, right? Biden's been talking about it. It was on his campaign website that said it's going to be gone. So again, and I think it won't happen. I don't think it's going to happen in the next 2 years, like Edwin was pointing out earlier.
Yeah.
I don't think it's gonna happen right away. I don't think the moment that Joe Biden gets inaugurated, the first thing he's gonna do is try to tackle COVID.
Yeah, I agree.
I think the way that he's gonna try to win his first 2 years in terms of approval rate is getting COVID disappearing. He's gonna try to get rid of, or at least try to settle down, right, the social issues. And then in the next 2 years, he'll start to, I think that's when he's going to start, or the second half of his 4 years, I think he's going to try to push some of his agenda, such as tax reforms, greenhouse energy, green energy. He's going to do a lot of those things on the second part. And who knows if it's a big if there's even a second term for Joe Biden.
Yeah, definitely a big if. But yeah, that's what drives me. Like, so Edwin, you mentioned, let's look at the comments here. Yeah, facts, no understanding of a P&L statement. Yeah, a lot of, especially the Joe Biden supporters that are in their 20s, you know, like this one guy was like, I think we were talking on Facebook. He's like, hey man, I'm not dumb, all right? I've seen quarterly reports of these big corporate companies. I'm not stupid. Yeah, you are. There's levels. There's levels to this, kid. Right? There's people, like, just because you know how to read a P&L. Like, Nick, would you say a Schedule E is a very prominent real estate form, right? That talks income and expenses?
Yeah.
For sure. Do you think anybody, like an average person, will look at it and know what to look for?
No.
No, right? So Schedule E it's a tax form for income and expenses in a real estate property. Guys, I have to teach people how to read it, right? Because if you look at it, you guys will know, like, the average, not you, people on the camera, but I'm saying the average individual walking the street will have no idea how to read it, right? I actually have to do probably close to a 3-hour training on how to properly read a Schedule E and a Form 8825, and that's on one real estate property. Imagine what a $50 billion company's, you know, P&L statement or quarterly earnings is going to look like. And you got these kids who know nothing about running a business, nothing about economics, saying, hey man, I looked at the quarterly reports, man. I'm not dumb, man. I got my degree in liberal science, man. You know, and that's what drives me nuts, right? It drives me nuts, and it drives me crazy. And I'll finish this rant on this, right? It drives me nuts that they're all like, oh man, why aren't you listening to the doctors? They're the experts of our society. We should be listening to them. I agree, we should be listening to them, right? I mean, a lot of them have been telling me something very different than what CNN tells me or what Fox News tells me, right? But I guess that's none of my business. That doesn't get the ratings. But why can't we put the shoe on the other foot of like, hey, let's rely on the experts of economics and entrepreneurs and, you know, when it comes to how to fix the economy, not these politicians. But anyways, yeah, 1031, I think if that goes away, I think, Edwin, you're right. All hell breaks loose. I mean, think about the amount of people that use 1031s. I mean, I run into a lot of people that lean on the 1031. It's unreal, you know. But yeah, I mean, I don't know. You know, Edwin said here he thinks Biden is a one-term president, and then Harris will take over when he's too old.
Here we go. Actually, Daniel, I have a question for you.
What's up, bro?
In a nutshell, can you explain to the audience what a 1031 exchange is, just in case, you know, people would like to know?
Yeah, so a 1031 exchange is so let's say you own a property. let's say you own a 12-unit apartment complex.
Yeah.
Let's say that you want to sell that building and get another piece of real estate without having to pay taxes on it. So it's not like you're liquidating the asset. That's not what you're doing. What you're doing is just moving the property. You're removing the equity that you have in one property and moving it to another. So what a 1031 exchange is you're exchanging, quote unquote, your equity in one property for another, right, tax-free. This implies you selling the building, right, and identifying another like-kind property, means it has to be close to what you already own. You're selling that asset. You have to have a buyer, right, because there has to be a transaction made. And you're buying another building, and you're doing it tax-free, or tax-deferred, as is the better word. Because eventually, if you keep doing 1031s and 1031s, and then you eventually sell your real estate, and you want to liquidate your equity that you have, you do pay the taxes on that, right? All the taxes that you deferred from your 1031s, you eventually have to pay it at some point.
The goal is you keep doing 1031s until you die. So
then the basis kicks in.
And then the stepped up basis. So this is why the 1031 and the stepped up basis, they kind of play together in such a great tax saving strategy, because when you start investing, let's say in your late or mid 30s, right? You every 10 years you keep buying, and every 10 years you 1031 exchange all the way to the point where you pass away, no more taxes. Like all the taxes you've deferred in the last 50 years or so.
Yeah,
you don't owe any. You don't owe squat.
And it just drives me crazy that people like Joe Biden, Kamala Harris, AOC, who've never owned real estate, who've never even, they've never had any experience in any of this. They made their money in politics. Nick, how long has Joe Biden been in politics?
Like over 40 years.
Over 40 years. The mother effer does not have any experience in anything else. You know what I mean? Now, guys, I have friends who are former politicians. I love them to death, right? They've got good hearts. They genuinely want to help people. Like, I'm all for those guys. But, man, like, dude, what are we doing? You know what I mean? Like, what are we doing? So anyways, let's talk back to markets in 2021. Nick, I'll ask you this question, my friend. I know you did a little bit of study on Bitcoin.
Yeah.
You do a lot of studies into alternative aspects.
Yep.
I'll ask you this question, man. What do you think is going to happen to those alternative investments like Bitcoin and stuff that people deem a little weird? What do you think that's going to happen in 2021?
Now, as far as 2021 goes, I think we're really going to see a jump into crypto, but the ramifications of that, I believe the dollar is going to get devalued significantly, as it already has been.
Yeah.
So if we're looking at like Great Reset type stuff, moving to like a digital currency, not this year, not next year, probably not in 3 years, but I would say probably within 10 years we're going to see something like that.
Yeah, I agree. Yeah. What do you think, Sam? What do you think is going to happen to the dollar, or whatever you want to talk about?
So I think it's true. I mean, the dollar weakens because and we're not saying the dollar just weakens because dollar weakens, right? There has to be a reason why the dollar goes down, and I think it has to do with foreign policy. I don't know if, and again, I'm being with all due respect, I don't think Joe Biden's got the gut to handle China, handle issues with foreign powers that could easily overstep the United States. China could be.
Yeah.
They could already be making moves right now to where they are wanting to dominate the United States, overstep them as an economic power, and be the world's economic engine.
Arguably they are now.
Arguably. So I think right now the dollar may weaken because I don't see President Joe Biden going and saying, "Oh, China,
right,
you guys need to stop." Right?
You know what I see? I see some president, whether it be China or another country, going to Joe Biden and saying, "Hey, let's make this trade deal. It very much favors my country over yours.
Yeah.
But I'll make you look good the next 2-3 years. It'll make you look very good."
Very possible.
Right? And the media will report it.
I could see that.
They'll say that you are the greatest president when it comes to the economy.
Yeah.
Right?
Very possible.
Long-term effects, horrible for your country, Mr. Joe Biden.
Yeah.
Great for mine, but it'll make you look good.
And Joe, right, probably, he doesn't have 20 years, okay? He's probably down to his last 10, 15. I don't know. I hope him well, right? I hope he lives for a very long time. Hope him, health. But reality is he is an elderly man, and it could be any day. But so for him, I'll be honest. why make a good decision for the United States? Why not make a good decision for Joe Biden? Why not make a good decision for Joe's family? For him, he could be done in the next 10 years.
Yeah, and sorry, Edwin just said something really important to me, at least, being prior service in the military, the Army. He said Biden is going to go big and find us a new enemy. That is the one thing that I fear the most, is that there's going to be regime changes again, and we're going to be
regime changes on who? In China or India?
I'd say we're probably getting back into the Middle East. We're going to look at Syria one more time, probably Yemen, all those places that I've had an understanding with during my military service. And to be honest with you, during the Trump presidency, we didn't start any new wars. Let's just call it, the facts the facts. We didn't start anything new.
Right.
But
we ended it. We ended a lot.
Yeah, the guy,
ISIS,
the guy brokered 4 peace treaties for the Middle East.
Correct. But
freaking great.
My biggest fear is that there's a lot of money to be made in war.
Oh yeah.
A lot of money to be made in war, and we need to not focus on that. We need to focus on what we have at home, including markets, monetary policy, all that stuff. But I just fear that's not going to happen.
Yeah. Well, it's a delicate balance because the U.S. has such a huge interest in I wouldn't say the world economics, but I mean, you see where the U.S. is going in terms of our businesses. We have financial interest in Middle East. We have financial interest in Asia. We have financial interest even in Europe. We have companies out there, right? So it's a delicate balance where even if sometimes we want to take care of things at home, but that also could translate into, we got to make sure that our companies overseas are taken care of. Thus, people who work at home are also being taken care of. It's a delicate balance, and it's I wish we could say, there's no more wars and there's no more conflicts, but sadly there are people who doesn't want that for the United States, right? They don't want that for the U.S. So. It's a delicate balance, right? We may have to start something new in terms of Middle East just to protect what's going on at home.
For sure. And guys, just real quick, interrupt. And Sam, I'm gonna, we want to hear from you a little about what's going on with stimulus, what's going on with PPP. Do you have any updates on that? But don't forget, guys, to like this video. Really, it really helps us out.
That would help us a lot, guys.
Yeah, it helps us with the algorithm, helps us to push it. And guys, at the end of the day, myself, Sam, Nick, we're truth seekers. We try and seek the truth and bring the facts. As best we can, aside from just the videos we release, right? This is a more laid back atmosphere where we get to hang out with you guys. You guys get to comment, engage with us. But we really want to keep it going. And, we're doing our best. We try and be as non-biased as possible and just call the BS when we see it. So like this video, guys, help us out, really help us push. But Sam, do you have any updates on stimulus, PPP, EIDL?
Nothing new other than the fact that we're still waiting. Pretty much all of us are still waiting on the EIDL grant to reopen. So let me just be clear. The EIDL, Economic Injury Disaster Loan, the loan is open. You can get the loan.
I got it.
Yeah, you can apply for it. But the right now the SBA is not ready for the EIDL grant of up to $10,000. Which there is fresh new funding. $20 billion has been reallocated to the EIDL program, but we just haven't seen the SBA come out and say, hey, the portal's back open in terms of the grant. The loan is still open. The loan will stay open for till December 31st of this year. But the grant portion has not been updated yet. I've checked it yesterday. I even tried filling out the application to see if it's secretly hiding somewhere. No, it's not up. Paycheck Protection Program, we've talked about this in our channel where there are new provisions now where if your business spends money on personal protection equipment like masks, barrier, air filters, those could count towards the forgiveness of the loan. So, which is nice. And this is very exciting. This is going to be really helpful for mom and pops and small business owners that might be watching this, even to landlords that are watching this. And that is PPP now covers property damage due to riots.
Oh.
Look at that.
Hey, look at that.
So you could actually, if your business, if your local store, your business, or your local Target, okay, was destroyed by the riots and the civil unrest, then you can actually borrow money from Paycheck Protection Program to repair those property damages, and that loan is effectively forgiven. Of course, you have to show that you've done that, right? You got to have receipts from your contractors, repair people, right? So yeah, that's really the big highlight update for the Paycheck Protection Program. Everyone should be getting their $600 stimulus checks per person. I got mine. I don't know if you got yours.
I don't know if I got mine yet.
Yeah.
What are you going to spend your money on, Sam?
Well, I already bought a piano. So.
Oh, you bought a piano?
Yeah, I bought an electric piano.
Cool.
Yeah,
I think I'm going to buy an electric drum set.
Yeah, go for it. Well, and it's funny. Some people have been asking us, well, how did you guys get a stimulus check? I thought you guys were filthy rich. And I'm like, well,
we're not filthy rich.
Well, so here's how that works.
We're wealthy.
Here's how that works, right? When you have the ability to write off a large amount of business expenses, wink, wink, then on paper you look like you're really poor. That's how it works. So we pay we pay employees, we pay Nick, right?
Thank you.
Thank
guys,
you, Nick.
Don't be mad at us. Be mad at the people who wrote that policy.
Yeah. We can write off cell phones. We can write off our home office expense. We can write off this office building. We can write off a bunch of things, which is awesome. And a lot of our personal expenses, it could be converted into business expenses. So therefore, bottom line, what we take home, what's on paper, is really low. Even after the fact that we spent a lot of purchased a lot of business expenses throughout the way. So
yeah, and guess what, guys? You guys can do it too.
And also, what's nice is that real estate allows you to take depreciation. So if you buy real estate, keep it for a while for investment purposes, you can depreciate it, meaning you can take losses on paper. It looks like you're losing money on paper, but you're not. You still have that money in your bank account. So you get to keep more in your bank account while still, paying less in taxes. This is why a lot of wealthy individuals invest in real estate in the first place, because there are a lot of tax advantages with investing in real estate.
Yeah, and guys, by the way, speaking of the market, speaking of taxes, January 26th, we've got a great virtual event happening, and I know a lot of people are still very cautious about COVID. They're still very cautious about meeting and event spaces. So due to that, we are going to be sensitive to those people and do a virtual event. So guys, go to where do they register? Dealcloserlive.com, guys.
I'm going to put it on the description section.
Thank you. So Sam's going to put it on the description. Dealcloserlive.com. The tickets right now are $47, I believe. And we got a great lineup of speakers. We got myself. We got my friend Jerome Maldonado. We got Ty Lamborghini Lopez. Is
here in my garage.
Mr. Here in my garage. He's going to be speaking. So the event's January 26th. It is on a Tuesday because we want you guys to be well distracted while you're at work. And it's going to start, right? So it's going to be awesome, guys. We're putting together a great lineup. The topic is going to be how to make money in real estate in the year 2021. We're going to talk about that. So we're going to talk about displacements. We're going to talk about moratoriums. We're going to talk about what strategies are best. We're going to talk about a lot of really cool, fun stuff. So, guys, dealcloserlive.com. Don't miss it. Check it out. We want to see you there, right? Tickets are cheap right now. Get them while it's cheap.
Yeah, dealcloserlive.com. And I just want to check. Oh, you know what? It might be Deal Closers Live. Let me just. Oh, I spelled that wrong. It was. I put D Closers Live.
We don't want to do that.
So I'm gonna put that one more time. Deal Closer Live.
The DEA Closer Live.
Yeah, look at that. It's D Closer Live.
Yeah, I deleted that. So
please disregard that last one. The message was retracted. Edwin said the closing table episode was dope. Thanks, man. I appreciate you, man. We have a lot of fun recording those. And by the way, if you guys want to be on the show and you guys want Sam and I to analyze the deal for you and have an opportunity to have people watch it and potentially even have people reach out to you, right? Then go ahead and check out the show. Where do they go, Sam? Do they email us? Where do they fill out the application to be on the show?
I would say... I don't want to throw another link in there because it's just like link after link after link.
Yeah, that's true. We don't want to do that.
So we'll mention it at the end. We'll throw it one more time.
Or I have a solution. Go watch the last episode.
Oh, there you go. Yeah, go watch the last episode.
Go watch the last episode.
It's in the description. So if you watch any of our Deal Closer episodes, I keep messing that up. Closing Table episode, you'll see it in the description on how to be on the show and be a contestant. So
exactly.
Yeah. Alrighty. Okay, so let's go and resume our conversation.
Yeah, if you guys have any questions too about real estate, about what do you guys think is going to happen with the market, put your questions down below, right? And put your comments too. If you want to add your 2 cents, you want to add your piece, then absolutely. Sam and I, this is, again, I love Fridays because we get to actually talk to you guys and have fun, as opposed to just having it be a video and then it's just that's cool and all. But this, for me, I love this. This is really cool.
Yeah, absolutely. With that being said, guys, so let's go and continue the conversation about what happened this week. Biden's tax plan, of course, the 2021 housing market. Daniel earlier pointed out that a lot of realtors are saying, "Oh, the housing crash is not going to happen," and of course, it's a little biased in terms of the comments.
I mean, I disagreed. I don't know if I made that clear, but I disagree with them.
Yeah, I disagree as well because I mean, I love our realtors, but when you're financially incentivized to say something, well, there's a conflict of interest there. So let's talk about. I guess we can talk about retail.
You want to talk about retail?
What's happening to retail right now?
I'm glad you guys brought that up because yesterday, just out of curiosity, I jumped on, like commercial real estate, for sale website. There, like, especially in the area where my parents are at, dude, there is a lot of retail shops that are for sale right now.
I believe it.
Like Chili's was for sale up there. Like, all these retail, storefronts were for sale.
That's interesting. Yeah, that's tough. Obviously, retail real estate right now and office space real estate is like catching a falling knife. I tell people right now, unless you have a strong business plan, you have, strong tenants lined up, don't buy into it necessarily just yet.
I think this year, if 2020 wasn't enough for you to realize this, I think 2021 even more. You gotta go virtual, man. You gotta. If you have a little boutique, clothing shop, right? I think it's time to go virtual. Just even yesterday, I was having a conversation with my chiropractor, Dr. Chris.
Yeah, shout out to Dr. Chris.
Yeah, he wants to go virtual, and he's wanting to get all kinds of help to go virtual as much as possible. But I think if you have a business where it relies on some kind of brick and mortar operation, it's time to go virtual. It's so true with fitness world, right? Because if you own a gym or if you own a yoga studio, it's time to go virtual. And there's so many ways to make money in virtual and online. I mean, we've been doing it for the last 5-7 years. We've been doing this for a while. So it's time to go virtual. I think any business could go into virtual. Do we still need retail? Yes, I think we still need retail, restaurants, actual physical gyms, right? We need those. But I think there's going to be more I see the more necessitation for a virtual presence for most businesses now or more than ever.
Yeah, for sure. Yeah, absolutely, man. All right, Edwin made a really good point. How do you feel about the 2.5 rate of inflation that's marked for the Federal Reserve? Edwin, I think you and I are on the same page in saying that we saw this coming. The amount of money that they're going to be printing. I think that Biden, again, I said it in the beginning of the show, but I think the Biden administration, they're going to go crazy with printing and quantitative easing and making sure that they have the liquidity for the short term while hurting the economy long term. That is what I predict. And I think that 2.5% mark of inflation is there to calm a lot of people down. Because first they said 2%, and then with all this money printing, they're going to go 2.5, and they're going to give themselves a lot more leeway to be able to do that. And a lot more leeway for them to be able to, put out the stimulus checks. I would not be surprised if Biden came out and said, we're going to do a $3,000 stimulus check. Or a $4,000 stimulus check. That would not surprise me. And I think the Fed is marking their 2.5 because they see what's happening with the administration. They see what happens. They see what they're pushing.
They could even push it to 3, which we saw 3 back in 2011.
Mm-hmm.
Well, I got a question for you guys.
Yeah.
Why was Jerome Powell a couple of weeks back in front of Congress, like asking for, hey, come borrow from us? Why would somebody want that?
Yeah, I don't know. I mean, man, that's a good question. Like I said, they're increasing their balance sheet. They really are, and not a lot of people understand. And by the way, when we say the Federal Reserve, they're not a government entity.
Nope.
Right.
They are its own private.
Pretty deceptive.
Yeah, they are its own private entity with its own shareholders.
Yeah.
Do not mistake that. The Federal Reserve has an operating agreement.
Yeah.
You could see it. I've seen it. And dude, they got their own shareholders, man. Do not be mistaken. Do not be fooled. Imagine being the bank for the U.S. government.
Oh,
You know, I mean, maybe that's what they're trying to do, man. But you know, they're at $7 trillion right now in terms of their balance sheet. They will get to 10 in 2021. I do predict it. I don't think some YouTube channels are saying it's going to go up to 20. I don't know if that's going to happen.
that'd be crazy.
Because you got to have another virus, and you know you got to.
Yeah, we haven't seen that since what, like the late 70s and early 80s.
We've never seen that.
Yeah,
We've never seen that at all. I mean, before the year 2020, the Fed balance sheet never went above 3, let alone 2.5 trillion. I think. I didn't even think even it went up about 2. Maybe in 2010. Maybe it went up there, but man, you know, it's I think they've seen it coming, and I think that's why they put that 2.5% inflation mark on there. So yeah, I mean, to me, it's no surprise. I'd be very curious to see how markets react, how it does to the futures market, how it does to the real estate market. Typically, housing, because it's so contingent on the masses, right? Because everyone needs a place to live. Housing is usually the last market to kind of feel the effect of a major policy change, or a major change in anything, for that matter, or monetary policy. So I think for guys like me, a lot of the real estate experts who stay ahead of the game, it's going to be very beneficial to us because we know what's coming and we know what's going to happen, because we typically know 9 times out of 10 how the masses are going to react. People are very predictable.
Yeah, I'm just looking at like projected GDP rates. Obviously, they're saying it's going to go back up a little bit because a lot of people are counting on the virus to go away this spring, possibly even early summer. But yeah, it's also projecting it will come down in 2022. And I'm wondering if that's making an assumption that Biden will go and implement a lot of these tax changes. I don't know for sure. Obviously, I'm just reading and interpreting based on what I'm seeing here. But so pretty much the next 6 months, I'm really interested to see how the next 6 months will unfold. Yeah. Especially after the inauguration, I'm really, really, really interested to seeing.
Yeah, I'm mainly curious, because we are a real estate channel, because we are real estate investors. I'm very curious to see what the eviction moratorium is going to do. Yeah. My prediction is I think for a period of time, at least in 2021, you are going to have a lot of landlords that are interested in selling their property. A lot of them are just going to be done. And I think it will be opportunistic for people to buy properties in 2021. Now, that can either go one of two ways. I think it's going to be extremely opportunistic in 2021, or I think there's going to be some opportunity, significantly more than what we've been having the last 3-4 years. And I think after that, it's going to spike even more, depending on what happens. It depends on what happens with the federal balance sheet. It depends on what happens with policy that the new administration is going to administer. It's going to depend on a lot of things. But rest assured, let's be very clear about this. If the housing market does indeed spike again after a short window of great opportunity, know that we are again kicking the can down the road.
Right.
That is what's going on. It is inevitable. Something is going to happen.
Got a question.
What's up, bro?
I have a huge question. What's going to happen to Social Security?
It's gone. It's gone. So to give you an idea, even before the first wave of stimulus, they said Social Security was going to be depleted by the year 2032. Now you add in that first wave of stimulus was what? 2.1 trillion? 2.2?
Something like that, yeah.
Astronomical. Now they're saying that if we continue this wave of stimulus, because this one was what, 925 billion?
Yeah, close to 900 billion.
900 billion. If we do another wave of stimulus, they're saying that Social Security Trust Fund will dry out completely by 2026.
Yeah. So 2026.
2026, 2027.
And that's an if they obviously do another.
But it will be gone in 12 years. Minimum 12 years. It will all be gone. It's gone. Yeah. It's over. Do not, folks, there's 90 people watching right now. Do not rely on Social Security. Right. I will echo the same economic philosophy that I've been echoing, that great men who have gone before us, who teach, who are driven to teach the American public to be educated in finances. Because if you are not educated in finances, guess who will take advantage of you? The banks, the government, these big entities that it is our common enemy. All right? Be educated. It's all on you. Do not rely on the government for your retirement. Don't do that. It's all on you. Be educated, right? There's no ways around it. I'm so tired of these individuals who are saying, oh, I'm going to retire, sit on the couch, and I've got this little fund for myself. Guys, don't rely on anything. Do your own thing, right? Be educated, right? Build for yourself, right? Because there's no one that's going to take care of you and your family and their kids like you will.
Yeah.
Right? So, guys, take initiative. Whether you get that from us, whether you get that from anyone else, guys, just please make it upon yourself. Take responsibility. Take ownership over your own finances and your generational wealth.
Absolutely. Yeah. All right, guys. I think we can wrap it up. I mean, this week was very tragic for the country. What we've seen, what we experienced.
I'm heartbroken, man.
Yeah,
it's tough to see.
I'm very interested to see again what could happen in the next 6 months.
Yeah.
Next 6 months, by far, I like the first 100 days of Biden. Very interested to see what's going to happen with the inauguration. Very interested to see what's going to happen in the housing market. I mean, we've been predicting something, like a market correction at least since, my gosh, like 2018, right? Yeah, very interested to see what's going to happen. What are your final thoughts?
Stay safe, guys. And if there's one message that I could tell everyone right now in this country is that we're all similar than what we'd like to admit.
Yeah.
We are, right? You have the people on the left complaining about how the people on the right supposedly, which I'm hearing reports and confirmation that it was different groups. I won't mention names, third-party interest groups. But we're all alike. Crazy people on the left rioted earlier. They burned down buildings. They burned down small businesses. They torpedoed. They stole. They looted. The people on the right did the same thing with the government. Obviously, I'd much rather happen to the government than the small businesses, because I think right now the government needs a complete reset, right? I think they all need to get their heads out of their butt, and we need to actually start helping the people and helping small businesses. But regardless, people are crazy on both sides. Right, the last thing that we need to do right now is stop talking to one another. We got to communicate. We got to love one another. All right, that's what we got to do, guys. Right, and we got to get educated as a people. We're stronger together than we are divided. But anyways, I won't go into that rant. Much appreciate every single one of you guys. Thanks for joining us. Right, we really appreciate it. Please like this video. It really does help us a lot with the algorithm. Check out our videos that we did. We recently did a video on the best housing markets for the year 2021.
Yep.
Please go check that out. Right, I put a lot of research into it. And Sam, what was your most recent video?
I think this is the EIDL video, which I'll keep you guys updated on the EIDL situation.
Please do. So be on the lookout. Right. So what are we releasing Monday, gentlemen?
The top credit cards for 2021.
That's right. We did it with Melvin. I love it. So guys, check that out. It's gonna happen. What, Monday at what time, Nick?
6 p.m.
6 p.m. We're going to release it Monday at 6 p.m. So best credit cards for 2021. Go check it out, guys.
All righty, guys. Take care. Have a great weekend, and we'll see you back next Friday.
See y'all.
All right. I got to pee.